All right, guys, I'm back again because Nvidia just came out with yet another monster earnings report. Now, the numbers is honestly wow for this report because the latest quarter it showed a revenue hitting $57 billion, up more than 62% year over year. Data center revenue alone coming in at about $51 billion. Now, this basically means a very important thing, right? Which is the AI bubble is far from over. The AI infrastructure race is still in full sprint, and Nvidia is supplying the fuel. Now, here's the part that most retail investors like you and me would probably miss, right? This surge isn't exactly powered by this AI industry as a whole, right? Because 40% of Nvidia's sales revenue actually came from four companies. Now, these four companies are Microsoft, Amazon, Alphabet, and Meta. They actually supply up to 40% of Nvidia's revenue, which means a huge part of Nvidia's data center demand, about tens of billions in GPU orders, basically already locked in, stacked, and shipped straight into their cloud expansion plans. Now, Nvidia isn't just selling you chips, right? They're also supplying the hyperscalers arms race. Now, we're talking about these mega orders that smaller companies simply cannot replicate nor fulfill. So, if you're talking about Intel, AMD, yes, sure, they might have some small orders with them, but not at the same level as what Nvidia is doing at the moment. And this is also exactly why Nvidia came in with a guidance being so hard. The company actually expects around $65 billion in revenue for the next quarter. Of course, with a 2% margin for buffer. Now, the gross margin is going to be holding at about 75%, which is pretty high. Let's be honest, having 75% gross margin for any business is wild, right? But the demand for Blackwell architecture chips right now is absolutely insane. Cloud GPUs are basically sold out. Partnership with Microsoft and Anthropic and the whole ecosystem building around AI data centers are pulling Nvidia into a position no semiconductor company has ever been in. They are becoming the core infrastructure layer of AI as of today. Now, of course, for my videos, I like to talk about the flip side as well, right? And the flip side is that when four companies make up such massive slice of your revenue, you kind of get new risk coming out. You get concentration risk because if any one of these giants start to show slowing of AI capex, Meta, okay, or delays in expansion, shifts to in-house silicon faster than expected, like Apple, right? Nvidia will start to feel it almost instantly when they have big customers started suddenly saying that maybe we can hyperscale on our own, things of that nature. And of course, with things like power constraint, land constraints, cooling constraints for the next generation data centers, these are all very real bottlenecks that can also happen to Nvidia. Because let's be honest, Nvidia cannot out engineer physics. These are physical restraints for Nvidia. Now, that being said, none of these four companies are slowing down in any shape or form because let's be honest, Microsoft is pushing everything into AI cloud leadership at the moment. And Amazon is already integrating their Trainium inferential, I think, and now Blackwell into their stack as well. And let's not forget, Google, Alphabet, is expanding Gemini infrastructure globally. Just looking at the latest Gemini 3 Pro and the deep thinking for Gemini 3, I can tell you, okay, Google is clearly showing how much better their progression in AI is compared to the rest of the industry. And of course, Meta is buying GPU like they are just burning GPUs daily, right? It's almost as if they're filming some crazy Tom Cruise shit at the side. But as long as these four companies continue to keep fighting for AI dominance, honestly, Nvidia is going to just keep on printing this ridiculous revenue quarter over quarter. Now, from an investor and options trading perspective for myself, right? I think this earnings print kind of reinforce the bullish thesis that a lot of people have on the AI industry. Analysts are already raising price targets. The volatility around the earnings is offering clean setups for strategies, right? If you're doing your call spreads, you're selling puts for entry. Honestly, just remember when your expectations are this high, even perfect numbers can get overshadowed by forward commentary. And always remember when there is this much optimism in the market, generally being bullish is going to cost you a little bit of money. right? So now let's get to the bottom line, right? Bottom line, Nvidia is winning the AI arms race today, and the bar is rising every single quarter as we speak. So I think if you're holding on to Nvidia, watching Nvidia, or just trading options around Nvidia, I think that this earning report basically show you the long-term thesis is still intact. The AI bubble that everyone was shouting about for the last couple of weeks doesn't really scare people as much. Even though Nvidia is now off its all-time high, I don't doubt that it will go back to its all-time high again. So yeah, just keep your eyes on big tech spending, supply constraints, and the next generation of AI workload. But I do get it, right? There's a lot of concerns that people have. So if you're wondering what you can actually do, I would say, first of all, for myself, I'm going to be keeping track on the hyperscalers right now. So as long as your Microsoft, Amazon, Alphabet, and Meta, they continue to raise their AI capex, then that's good. Because if they're going up on it, as long as they're still hyperscaling, we should be fine. Nvidia's revenue momentum is going to stay intact if that's going to be the case. Secondly, I'm going to be looking for Nvidia's margin trend every single quarter, because if the gross margin stays above 70%, which it is going to be above 75% according to guidance, it means that pricing power is still strong and demand hasn't really waned. Now, thirdly, is going to be if you are an investor, this kind of earning strength basically supports you staying long or scaling in slowly through dollar cost averaging instead of chasing this minor spikes every single few weeks or so. Now, if you're an options trader, I think this environment is going to be favoring you with a structured setup like your call spreads, your directional exposure for put selling to get into with better pricing. And I think finally, just pay attention to supply constraints, like I said before, because the moment power or land bottlenecks slow down the data center build outs, that's effectively your early warning signal going pew, 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 pew. Get out because the market is going to react really, really quickly. But anyway, if you found this helpful, hit subscribe and I'll break down the next wave of any earnings that you're interested in and any sort of micro, macro catalyst in the market. Anyway, thank you guys so much for watching, and I'll see you guys in the next one. Peace out.